Thank you for joining this webinar today from Yellowstone Advisory. Today's company presenting is RBG Holdings, who published a trading update last week and reinstated financial guidance for the year. While we're waiting for everyone to arrive, I've just put a poll up on screen, and I wondered if you could just complete that. We'll just wait for a couple more moments, and then we'll start the presentation shortly. Thank you. So hopefully you can all see the results there. We have a roughly 50-50 split between holders and non-holders. We are really pleased to have with us today Nicola Foulston, who's the Chief Executive, and Robert Parker, the CFO from RBG Holdings. And they are going to take us through today's presentation. There'll be plenty of time for questions at the end. And before we start, I'd just like to go through a few points. You're all currently on listen-only mode. We encourage questions, as I said, and if you'd like to ask a question, please type that into the Q&A box at the bottom of the screen, and we'll come to all questions at the end of the presentation. The format today is a presentation from Nikki and Robert, which will last approximately 30 minutes, and then we'll move to Q&A. And following the meeting, you'll be redirected to a short survey form, and if you'd be able to complete that, it would be very much appreciated. So now, without further ado, I'm going to hand you over to Nicola Foulston, who will start the presentation. Nikki.
Thank you very much, Alex, and good afternoon, everybody. Just a quick introduction on myself. I am the Group CEO of RBG Holdings PLC, and I joined Rosenblatt, the law firm, in September 2016, having been a client of the firm for nearly 30 years. My background was originally in motorsport and the leisure industry, where I acquired Brands Hatch Circuit in 1992, listed it in 1996, and sold it in early 2000 to Interpublic Group. I'm joined today by Robert, who is my CFO and who will no doubt talk a little bit about his experience when I hand over to him on the financial section of the presentation. A little bit about the structure of the group. Originally, we acquired the trading and assets of the law firm Rosenblatt and floated in May 2018. We added to that the acquisition of Convex Capital, which is a sell-side only M&A advisory business, in the third quarter of 2019. In the first half of this year, literally a couple of months into the coronavirus pandemic and lockdown, we launched Lionfish Litigation Finance, which is a buy and sell of litigation finance investments, investing only in third-party litigation. So it doesn't invest in Rosenblatt's own litigation cases. What I always seek to do at this time of the presentation is set out what is our strategy and then take you through how we believe we're delivering against that strategy. So our strategy is to grow the legal business of Rosenblatt Limited, focusing on high margin work that we do. Many law firms are full service firms, and they will cover a cross section of legal services and legal products, which are often fixed fee and fixed in pricing, which means that generally a large full service law firm will have margins of somewhere between sort of 15 and 20% at the generous end. And if you look at any of our peer group, and we have a peer group metrics slide in the appendix, if you want to look at this later, will show that our metrics are higher than that. So when I joined the business in 2016, I focused on the high margin area of law where we could make the most money, which tends to be contentious law. In 2016, when we went to market, contentious law made up about 50% of our revenue, and today it's nearly 80% of the revenues of Rosenblatt Limited. So secondly, we wanted to use the expertise we have within the legal business to move into litigation finance. Litigation finance is obviously only used by contentious matters, And given that we have over 30 years experience in contentious law, I saw this as a good opportunity to leverage that expertise. Again, when I joined the law firm, I saw very quickly that litigation hedge funders were able to take advantage of an industry that was undercapitalized. And with the right capitalization and the right connections in terms of raising further capital, there's no reason why that litigation finance business should not be part of the same group. We also wanted to take advantage of a highly fragmented professional services market where we believe there are other high margin professional services businesses that would work well within the group. We are by our nature an entrepreneurial group, having been founded by Ian Rosenblatt, who is an entrepreneur, run by me, who is an entrepreneur. And we wanted to see other businesses that would benefit from being part of the group, but are also high margin. And we identified Convex as being one of those businesses, also led by an entrepreneur in Mike Driver. So how have we delivered against that strategy? We've grown the legal business with revenues up 42% at a half year to June 2020 to 11.7 million, despite the lockdown and us all working on a remote basis. The dispute resolution department is also increased, and that is an important number to look at, because although we have increased materially 13%, we have also continued to undertake work into our contingent litigation investment cases where we do not recognise the work in progress because it is contingent upon us succeeding in the case. And therefore we have done another £900,000 worth of work in the half year on litigation assets that are held by Rosenblatt. Luckily, our corporate division has bounced back from having a poor fourth quarter and poor half year last year, which was largely down to the uncertainty around Brexit. And you can see that there's a material change in the corporate division's performance. I am personally targeting revenue per fee earner at around £500,000, and we are coming now very, very close to doing that. We do target, we're a cash business, and we target strong cash realisation across WIP and debtors, and I'm going to leave Robert to take you through that in a little bit more detail. Utilisation and realisation are key metrics for a legal services business, and the target for the sector is 75% utilisation of time and recovering about 85% of that 75%. We achieved in our half year 95% utilisation, which of course is largely down to lockdown and the fact that people were stuck with nothing much else to do. However, the work has to be there because this is chargeable time, so they cannot just file load onto non-chargeable files. And as you can see from our recovery, we have over-recovered, and therefore that shows you that we're charging fees that are higher than actually the work has been incurred at retail rates at 114% recovery. As of the 15th of September, we had 8 litigation cases with an associated contingent work in progress on our balance sheet of 3.8 million and an additional cash investment of 4 million. And those cases remain ongoing. And I will talk a bit about later where the upside of those cases impacts the business particularly. So we created the separate launch of Lionfish in May, and we have delivered on that, and we have 2 types of litigation investment. RBL owned client matters, although that is undertaken by RBL itself, and litigation matters run only by third-party solicitors, which has nothing to do with Rosenblatt at all. The diversification of the group, we had great hopes that in 2020 would have been our year if Convex would have had an incredible pipeline of over 30 deals in process at the time that we went into lockdown. And unfortunately, that business suffered the most from being locked down and unable to physically undertake meetings. However, the bounce back in Q3, Q4 is marked. We've already announced the closure of 1 deal, and we have 8 more in the pipeline that will fall either in Q3 or early Q1 2020. So to give you an overview of the group, we were able to work very successfully remotely. We had made a £500,000 investment in IT when we went public in 2018. And therefore, we already had Microsoft Teams and many other remote working features that enabled us to move seamlessly to working outside of the office. The group traded profitably, and we did not have any litigation investment sales in the first half of the year, and these were not planned to happen as Lionfish was obviously only launched towards the end of the first half of the year. Moving on a bit, to talk a bit about Lionfish. It is run by industry expert Tetsu Shikawa. The industry attracts either lawyers who think they can run funds or failed hedge fund managers who haven't made it in other areas of investment industry. Therefore, it took a long time for me to launch this division because I was particularly looking for someone who was good and knew what they were doing in this sector, and Tets is definitely that person. In the short time to 15th of September, he had generated 112 inquiries for funding, and beyond the 23 cases in active review, we've approved 6 and executed 3 as at the date that we did this presentation, which was a few weeks ago now. And we also launched Islero, a new generation of financing for insolvency claims, whereby we will buy the insolvency claim off the insolvency practitioner and run the claim using our own legal resources in RBL for the insolvency practitioner. For those of you familiar with our sector, you may have come across Manolete. It's actually pronounced Manolete, and he is the famous Spanish matador who was killed by the bull Islero. So there's a little play on words there just to satisfy my sense of humour, which I'm not sure Manolete found funny. Moving on to Convex. Convex is a sell-side only M&A corporate finance boutique. So just to explain what that means, there's lots and lots of corporate finance businesses, and generally speaking, they like to work on retainer, they like to be paid regularly, and they like to advise companies on their M&A strategy, in other words, their acquisition strategy. Convex was acquired 5 years ago by Mike Driver, who sold his office supplies business and used Convex to advise him. He realized that it was, to quote him, money for old rope, and that he thought that there was a much more opportunity for a business like this to proactively affect the valuations of companies that they advise. He therefore bought the company because he liked it so much, moved the average fee from £200,000 per transaction to £750,000 per transaction, which is way over the industry average, and moved the business to only advising sell side, where he believed that they could add value on the valuation that companies attract. There's a real in-depth talent there with the proven deal makers, and they completed 13 transactions in the full year 2019, of which we only consolidated 1.9 million at the end of 2019 post-acquisition. It's generated an average revenue of 8 million over the last 4 years. And therefore, we're very confident that once the pandemic is behind us, that this business will prove its worth. I will now hand over to Robert, my CFO, to give you a financial presentation.
Nikki, can I just go back to Convex to give you a sense of where the business was and where it's come back to? So pre-COVID, they had 6-7 deals in process that would have delivered up to £10 million worth of revenue. Obviously, with COVID, that deferred, delayed that part of the business, and they've built back up. So as Nikki was highlighting, within the next 2 quarters, they've got a number of deals that are in process, which effectively replace that revenue that has been deferred or lost pre-March when COVID striked us in the country. So the guys have worked incredibly hard. And as Nikki said, they're a consistent business that delivers value. And we're seeing a considerable upturn in that particular area of the business. The M&A activity is very, very busy. And Convex have got to the point where their pipeline is full, and really they need to grow to take on more business. If I can take you to the financial results, and I've got a bit of a health warning. So these are our 6 months to June 2020. We are a very different business now to what we were in the last 6 months, 2019. We are 3 separate businesses. So we still have RBL, the law business, which chonks along and delivers month-on-month revenues. We have Convex, which we've talked a little bit about, and we have Lionfish. So Convex and Lionfish are transactional businesses. So when that revenue and profit drops into the business, it's not consistent year on year, and it's not consistent half year on half year. So what you're seeing with these results is, in effect, we're not comparing like with like, and every half year is very different. Just a snapshot on our results. So our revenue was up 17% to 12 million. Predominantly that was RBL revenue. We had one small deal in there from Convex, but it fundamentally is the RBL revenue. And as Nicky's highlighted, it's significantly up on last year. If I compare it to last year where we had 10.2 million, within that 10.2 million, we had 2 million of litigation sales. The litigation sales are very profitable and they drop all the way through the business. And you can see with our comparison with our half year to half year, it makes a significant impact. Our EBITDA, we delivered 2.6 million, 22% of revenue. As Nicky has highlighted, we generally target a lot higher than that. We'll be looking for around 38%. One thing that is consistent with this business is that we generally have a bigger second half than we do to the first half. And we expect more profits to flow through. And we're seeing the deals coming through for Convex and for Lionfish that have dropped into the second half. Our profit before tax is 1.4 million, 12% of revenues. But what you can see when we compare our half year in 20 to our half year in 19, obviously the significant impact of that litigation or the realized gains from litigation. As we've said and we'll repeat, we've got a strong, consistent performance from RBL. RBL has probably been the busiest it's been, I would say, since its history, and has delivered consistently and will deliver consistently more revenue this year than it has in its previous life. Our net debt is 1.6 million. In March of last year, we organised an RCF of 10 million with HSBC. We're a bit old school. When the pandemic hit in March, we drew down RCF, having gone through 2008 and other recessions. We just wanted to make sure that the banks would follow through with their commitments. We've got 1.8 million of net debt at the half year. And the RCF was there to fund the difference between our investments and the realization of our investments as we go through the period. Just to clarify our position on the dividend policy. When Nicky IPO'd this business, it was on a strong strategy that 60% of all retained earnings will be distributed back to shareholders. That is still the policy. We have deferred the decision on this interim dividend until we have more visibility as we go through the year. But the strong message is that this is a dividend paying business, and it's a 60% retained earnings on the financial year that we target year on year. I'll give you a bit more context around the income statement. I'm just conscious of our 30 minutes. So as we've repeated, our revenues are up 17% to 12 million. 11.7 million of that was the RBL revenues. RBL was strongly performed in the first half, and we're still seeing those consistent levels as we move through towards the second half. 42% up on last year. I will give you a health warning. As I said, in professional services, no one year is the same. What we're seeing significantly this year, or in the first half of these results, is our corporate division, almost a bounce back from the corporate division. We did circa 3.3 million in the first half of this year in corporate, against a full year of 2 million in 2019. I'll just pull out a few highlights. Personnel costs are 7.5 million. 1.1 million of that is through the Convex and not so much Lionfish, but Convex salary cost base. Obviously, we've only got a small amount of revenue in Convex, so there's a bit of a mismatch between the revenue and income and the cost within Convex. What we did around Convex when the pandemic hit is that we reviewed the business and did an element of restructuring. The senior management team moved away from a fixed cost base or a fixed salary base and put the majority of their salary into a commission-only base. So we restructured that business and reduced the cost base by around 50% month on month. Other things to pick up. When Nicky set up the business, one of the key things he wanted to do is that have a fixed cost base to deliver a certain revenue, but where the business was booming and driving revenues, to bring in contractors to match that. So as you see, our contracts are 1.4 million. These are fundamentally driven into revenue generating activity. So as the business has picked up and the demand has picked up in the first half and second half of this year, we're using contractors which are variable in sense that we can switch them on, switch them off as much as possible. Our other operating costs are 1.7 million. If I strip out the one-offs, I 0.2 million for convex and 0.3 million for a professional fee, our operating costs half year on half year are effectively the same as they were. If I could then move on to the cash flow and just talk a bit about some of the highlights of the cash flow in the next slide. That's one, yeah. And it's just to highlight the impact. So we think we've had a strong half year. We've been cash generative and profitable. We generated 1.4 million of profit before tax. There are some movements in our cash flows that I just want to highlight and just explain. So we've got an increase in trade debtors of roughly around 4 million. What you will see is the majority of that is current. During June, we had our biggest billing month ever in the business. We billed, I think, 3.3 million in the month of June. So that skewed that number of our debtors number. The other thing I want to highlight is as Nikki pointed out, we continue to invest in our litigation assets. In the first half of this year, we still invested 1.6 million on the back of investing 2.2 million up to the end of last year in 2019. As you can see, the impact, we did draw down the 10 million. We're using 1.6 million of that as a part of our net debt, but you see this very much as a timing difference within the facility we have. Just quickly moving on to the balance sheet on the next slide. I want to pick out certain things, just to draw yourself detail. So as you see, trade and other receivables are 15 million. 16.7 million of that is debtors. And as I've explained previously, 3.3 of that is current, which has already been collected in the latter part of this year. Our WIP is around 3.7 million. What we do in this business, we have a monthly heartbeat. We review our WIP and debtors on a month-by-month basis. Our debtors, as we moved into March, we actually do that on an everyday basis, as we thought there would be a slowdown. But what we're seeing is that there's no significant difference in our trade receivables. I highlight on the previous page that our total lockup was 114 days, down from 118 at the year end. And our debtors within that have ticked up a little bit to 49 days from the 45 days. And I would say our trade debtors or our debtors are best in class within the legal sector. If anyone can come close to those 49 things, I'd like to see it. The other things just to highlight as I move through, talked about the net debt of 1.6 million, have 34.7 million in tangibles, 33 million of that is goodwill, which attributes around 17 million to RBL, the legal partnership, and 15.8 million to Convex. As we've shown, and I think we've highlighted that Convex is a solid business that consistently delivers profit, and we just see the delay caused by Convex, which will pick up in the next 2 quarters. Our litigation investments to date, at the end of June, we'd invested 3.8 million in around 8 cases. Our trade payables of around 8.8 million includes 4 million of an earnout. And probably Nikki would talk a little bit more about this, because we've come to the earnout period, which Convex hasn't achieved because of the impact of COVID. So Nikki will explain what we're doing with that to re-incentivize the guys as we move forward. So that was just a whistle-stop tour around the financials. And I'll pass back to Nikki.
Oh, I've lost it.
Oh, you're back on, Nikki.
I know, but I've lost it.
Well, we can hear you, Nikki, and
Oh, good. Can you hear me?
we can hear you, and the presentation is on screen. So
I know. If you can hear me, that's fine, because I've lost the screen that I can see you. Anyway, it doesn't matter. So the summary is to touch on and finish on Robert's point about Convex. We obviously felt that Mike, being an entrepreneur himself, having made money, having already sold one business, it was absolutely essential that we re-incentivize the team by extending the earn-out in order that they deliver. This we have agreed with management and will be doing over the course of the next 12 months in through 2021. But it will take account of any accrued losses, should there be any, at the end of this trading year, and that still remains very much in the balance. So to summarise where we are today, I think we are a very strong professional services group. We've got the added interest of having litigation investments. So although we are very focused on, there we go, my video's back. Although we're very focused on high margin areas of professional services, we have that added benefit of having those litigation investments. And what will happen when those come through, and Rosenblatt has a traditional 85% success rate on its litigation, is that we will have some extraordinary profits, and then we will be able to issue some special dividends in that situation once we have refunded our own investment pool in order that we can continue to expand the business. So we are optimistic, I would say, given how we've traded through what has been an incredibly difficult period for everybody. I am optimistic about what the future will bring.
Fantastic, Nikki. If you could just leave that slide up on screen. Thank you very much to yourself and to Robert for the presentation. There's clearly been some really good progress made over the last few months, and we're all looking forward to that to continue. We're going to go to some questions now. We've had a couple of questions that have come in already, and just to remind you, if you do want to ask a question, please type it into the Q&A box at the bottom of your screen, and we'll try and get to as many of these questions as we can. So let's just start now with the first question, and that is on Convex Capital. At the figures you mentioned having to renegotiate the terms of the deal, why? I think that was partly covered, but do you want to just elaborate again, or just to clarify about the Convex deal?
I'm not sure I understand the question. Can you repeat it?
So on the Convex Capital, when you announced your figures, you mentioned that you were going to have to renegotiate the terms of the deal. Could you explain?
So no, we haven't. Yes, we haven't renegotiated the terms. We have merely extended on the same terms, and the only difference to the terms of the earnout is that they have to cover any accrued losses that have resulted from the pandemic.
Okay, thank you. Second question here. In the past, RBG Holdings have said that the possible value of cases on the balance sheet was 30 million with a balance sheet value of 4 million. And can you give an update on the current balance sheet value and possible ultimate value of these cases?
I don't think that they mean balance sheet value. I think they mean claim value. But Robert, do you want to, I know the claim values, but Robert, do you want to answer the rest?
Yeah, as to the balance sheet value, we do not carry any contingent value on our balance sheet for the contingent cases. So if it's a contingent case, there will be zero in the balance sheet for that case. So yeah, going back to the point, we try to be as prudent as possible. We don't account for contingent cases, but I think, as you say, Nikki, they're more looking towards what we believe the claim value could be rather. So just to be clear, there is nothing in our balance sheet. We are carrying nothing in the balance sheet for contingent cases.
No, so the claim values on some of the investors, the two Elephantine cases, are very large. They are multi-billion dollar claims, and we would expect them to settle in the many hundreds of millions, maybe even in the early billions. And the potential returns to Rosenblatt will be in the tens of millions.
Okay, well, so some big numbers there. Thank you for that.
Very big.
Another question here, how important are share dividends for staff? And just a related question, how much of the company does management own?
Management owns 46% across management and employees, and about of the 46%, about 5% is in employee hands. So 41% is in senior management hands. Dividends are very important to senior management and to senior staff, and it does form part of their remuneration. So that's one of the reasons why we are so committed to a progressive and strong dividend policy. Okay.
Going back to look at Convex, can you talk about the 8 deals in the Convex pipeline in terms of transaction value if they've closed? And a related question that came in is, you talked about the convex pipeline being delayed into the second half, and a lot of it due to M&A. And does that mean that Convex is currently working on a lot of M&A work currently?
Yeah, so yes, it is working on a lot of M&A activity. There's a lot of money looking to get into deals and to buy companies. Robert, do you want to just give a flavour? We can't give you a flavour of the actual fee values, but what we can do is give you a flavour of the deals themselves, because what sectors they're in. So to give you an example, one of the great things about this business is it lost some of its pipeline as we went, or much of its pipelines went into COVID, because it was in areas of businesses that were very badly affected by COVID, for instance, the travel industry. And they've effectively rebuilt their pipeline. Robert, what's your view on what some of the sectors are that they're in the short-term pipeline?
Online technology, which I would say is COVID friendly. Quite a lot of online retail, pharmaceuticals, some medical related businesses as well, and professional services businesses. So a mix, but the common theme with them, all of them, is that they've traded very strongly through the period from March up until to date, basically. So they were good businesses before COVID, and they've carried on to be very strong and businesses moving forward. An interesting one, Nikki, the deal that we announced where Convex closed just recently was a vitamin business in the pet market.
Yes, it was a new, yes, vitamins, pets sold to a Swedish buyer.
Okay, thank you. In the trading update, you mentioned that case values and volumes were both significantly ahead year on year. Can you expand on that? Does significantly mean, more than 10% or less, or is there anything else you can say on that?
Case volume, yeah, Robert.
Yeah, I think good to volumes is the business is very busy. It was effectively 40% up on the same period last time. So yes, it will be in double digits in front of where we've normally been. If we look at last year, we're just generally as a whole a lot busier. So I would say it won't be 40%, but it will be significantly up on where we are from last year.
Well, those are some big numbers. Looking at remote working, you commented that you've moved to remote working for a lot of your staff. Has this been a positive? Has it had an impact on billing rates?
Yes, so as you can see from the utilisation and the recoveries of that time, it did have a big impact. We use Microsoft Teams, which I can tell you now, having just done this webinar, is a lot easier than Zoom. I don't know why so many people love Zoom, but we use Microsoft Teams, and we were already using it as a system in the business. So it was really, really good, because it probably forced some of the older members of our team, and I'll put myself in that category, to actually embrace technology in a way that maybe we hadn't, catching up with the younger members of the team. And I think people appreciated the work-life balance, because a lot of time is spent commuting to central London. I myself have the longest commute of anyone at 3 hours each way. So it really did change the way we could all commit to how much time we could give it. So it has changed the rates. It obviously, getting to revenue per fee earner of 497 is driven by that. But the work had to be there. So what we discovered is that there was an incredible demand for legal services. And I think that's been felt across the board. It's not just us, which was a bit of a surprise. It could have gone either way, really, when everybody first went into lockdown. So yeah, we were, and I think the fact that we're a contentious business and we do crisis type work is that we were very suited for people to turn to us when they didn't know what to do and when there was concern and crisis around businesses restructuring, employment work, etc.
Okay, thank you. There is some component of the market which is hesitant on legal firms, as it's perceived that the partners get paid high salaries and then they get a profit share, i.e. the returns of the business are overweighted in favour of the partners. Can you comment on how this works at RBL? Yeah,
that structure that you're describing is the private sector. There isn't, I don't think, a law firm on the public market that is structured that way, because it doesn't work, very simply. So on the private market, base salaries are reasonable. I wouldn't say they're much higher than ours, they're reasonable. And then there's a large profit share, and all of the profits are distributed amongst the partners on the higher fee earners. When you go public, or when you take a business like this public, then it is about showing the partners that they basically commute their profit share for shares in the business that gives them a capital gain. And it is more cost effective for them because they are taking a profit share at income tax rates, and before the government changes CGT anyway, it's far better to be given a share on a multiple of profits basis and own that share that you will one day sell and pay CGT on than it is to take a continual profit share. So in RBL, we bought out the profit shares by giving them shares, which is why the dividend is important. And they are mainly on a base salary. In the event that we beat our numbers and we do better than we are expected to do, that creates a bonus pool. And that bonus pool is used to pay all staff bonuses across from partners all the way through the business. But it is effectively self-funding through the overperformance of our business. The highest salary paid to a partner in this business is £300,000 per annum.
Okay, thank you. You mentioned a decision being made about the dividend when you had further visibility of the year-end position. What sort of visibility does the company generally have in terms of being able to look forward and seeing what's coming down the tracks?
Yeah, so the hardest bit for us at the moment is convex. And the reason it's hard is very simple: tier 1, 2, and 3. They go, if the government continues to do more and more restrictive measures, if they go as far as a circuit breaker or a national lockdown, then Convex will not be able to have its meetings, and ultimately face-to-face meetings lead to executed deals. And all that will do is push the deals out and affects the year end and where the deal falls. So we want visibility, and I want to see the 31st December trading numbers before I will recommend to the board whether a dividend could be paid. And I would expect us to make a decision on that, and you will get some visibility on that decision in our trading statement in January.
Okay. In terms of meetings, have you considered using Loop Up, which this particular questioner thinks is a higher quality and a private secure network, and it works with 20% of the world's top legal firms and is now linked with Microsoft Teams? Is that something you've considered?
We actually have it. That's what we use. That's our system. We're obviously on your system today, but Microsoft Teams and Loop Up is our system, and that's what we use to communicate with our clients and our staff.
Okay, thank you. Question here: can you comment on current trading, especially in lionfish?
So lionfish has kicked off particularly well. It was never. I think it's scheduled to do, and Robert will have to say whether the specific revenues it's forecast to do are in the broker's note, because I can't remember if it's specified out. But it will make its forecast for this year, we're confident, and it has been. It's doing really, really well. It's a very, very high margin business at around 80%.
Brilliant. We've probably got time for a couple more questions, and so if you do want to ask a question, please type it into the Q&A box at the bottom of your screen. I'm not sure who this refers to, but a question coming in regarding the remuneration of Ian, and wondering why he needed such a large remuneration package when he is such a large shareholder. Would you like to comment on that?
Ian, I'm not sure whether we don't publish his remuneration, so I'm not, and he's not remunerated because he is still an advisor to the group and our sort of founder. What they might be referring to is that we extended the restricted covenants around the purchase of Rosenblatt Limited and paid an additional £1 million to extend those covenants from May 2021 through for another 2 years, and that payment was made earlier this year.
Okay, thank you. We currently have, we've got currently a couple more questions coming in. Manolet has a national network for collecting cases. How can you compete?
Undercutting them. They've got a huge, they've got a very, what's the word? They're a good, strong market position. They're the majority position in the market, and therefore they have priced accordingly, and they are very expensive. So the way to come into the market, one of the reasons we wanted to, is that they share almost or very little of the award with the insolvency practitioner. So if we're prepared to price better than that, which we do, then it's about converting those practitioners, which isn't difficult if you say that they're going to make more money out of it than they will on the other offering.
Brilliant. Nikki, Robert, thank you very much. That brings us to the end of today's webinar. Thank you for attending. As you leave, you'll be asked to complete a short survey. We would appreciate if you could complete that. And if you've had any questions that haven't been answered, I wondered if you could send them into info@yellowstoneadvisory.com. And just a point here, our next webinar is on Monday, the 2nd of November, when we're running an educational webinar on cryptocurrencies. So thank you, Nikki and Robert, for such a clear presentation today. Congratulations on the performance of your business, which seems to be performing very well. I think you've done a fantastic job. And thank you to everyone attending. Thank you.
Thank you.